While most companies never reach a $1 trillion market cap, Nvidia added $1.3 trillion to its market cap last year. This GPU and gaming computer manufacturing beast has rallied 40% in 2025, which is extraordinary for trillion-dollar companies like Nvidia. Could it continue its rally, or is a huge correction incoming? I'm SK, and today we are diving deep into the technicals with moving averages, RSI, MACD, and Bollinger Bands. By the end, you'll know exactly what the charts are screaming. Without further ado, let's dive right in. Nvidia's chips are powering everything from consumer gaming to large-scale AI, and at the same time, it is in the middle of an AI bubble controversy. We can see this confusion playing out through the choppy chart pattern. Nvidia closed at around $186 on Jan 13, up from a recent low of $170. But numbers alone don't tell the story. So let's unpack the indicators one by one. Starting with the simple moving averages, the 50-day simple moving average is sitting at about $186, while the 200-day moving average is at $162.5. Right now, the price is just below the 50-day moving average and above the 200-day moving average, signaling negative momentum with a bullish trend, often looked at as a pause or consolidation in strong uptrend, similar to what happened in early 2025. With a golden cross in late June, where short-term average crosses above the long-term average for bull runs, the stock ran from $155 to highs of $210 before dropping to its recent support at around $170. If the stock crosses above the 50-day moving average again, watch for a momentum shift, given that it breaks its newly formed resistance at around $190. That's your buy signal for a potential big move upwards. Next up, the Relative Strength Index, or RSI, which measures the speed and magnitude of a stock's recent price changes to detect overbought and oversold conditions. It's around 50, which is the neutral level, neither overbought nor oversold. It becomes harder to predict the stock's move without looking at other indicators when RSI is in the neutral zone. Keep an eye out. If RSI gets close to either 30 or 70, it would be your call to action, depending on whether it's overbought or oversold. Now let's talk about MACD. The moving average convergence divergence tracks momentum, and currently the MACD line is at 0.71, just below the signal line at 0.84 on the positive terminal, indicating a negative momentum within a larger uptrend. Last month, MACD line crossed above the signal line and moved into the positive territory, indicating increasing upward momentum and a potential buying opportunity. But today, the MACD line crossed below the signal line, giving mixed signals. As MACD relies on EMA instead of SMA, it is more prone to noise and a better fit for shorter-term trading. If you're like me who holds trades for a longer period, then you are better off relying on SMA. For now, it seems like the price will go down to test its support at $170. Now, Bollinger Bands, which is basically a statistical tool measuring standard deviation from a certain moving price average, typically a 20-day moving average. If the stock price gets closer to either the higher or the lower band, expect a reversal, as we have seen in the past 2 months. Currently, the price is in the neutral zone. Expect a move to the other side if the price gets closer to any of the bands. The bands expand in high volatility like we saw in November, and it gets harder and less reliable to use Bollinger Bands because wider bands create more noise, making it harder to tell if a price touching a band means a reversal or just normal extreme movement. The price seems to be consolidating again around $180, but the signals are not clear. Waiting for the bands to narrow would be the right thing to do. It's always better to combine a couple of indicators to get clear signals. For example, in the beginning of November, the price crossed above the upper Bollinger Band, and at the same time, RSI was above 70, signaling overbuying, which could have given you great entries for a short or a signal to take profits. In fact, MACD also signaled bearish momentum at the same time. In general, the stock is consolidating around $180, testing both its resistance at $190 and support at $170. If there's a clean break in either direction, it will continue that trajectory for some time. Might test its all-time high if it breaks above 190, or probably goes down to its deeper support level at 150 if it breaks $170. For now, it's better to just wait and let it play out. Remember, trading is all about reacting to price movements rather than predicting it. What do you think? Will Nvidia go towards its all-time high or down towards $150? Let me know in the comments. Please like if this helped and subscribe for more tech analysis that beats the market. Thanks for watching. I'll see you in the next video. Until then, take care and invest wisely.